Welcome back to Strongman Personal Finance. This man, Michael A. Gayed, CFA, was such a great credential, so useful. This guy blocked me on Twitter, and it really, well, X, excuse me, it's X now, not Twitter. This guy blocked me on X, and it really hurt my feelings. Because if you go through his Twitter, right, he's got 749,000 followers, and he says lots of curse words, and here he is getting interviewed, and oh my God, there's about to be a credit event, and something's going to happen, and blah, 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 blah. But anyway, this guy blocked me, and I started to look into him a little bit. I said, why did he block me? You know, what's this guy all about? Well, we know he has a massive Twitter following, and he tweets all the time about, you know, how the world's coming to an end. It's probably half a joke. But I actually found out he's a portfolio manager at TORSORO Investments. I've seen plenty of clownish ETFs come out of TORSORO or affiliated with TORSORO. And he actually manages an ETF. So we're going to go check this ETF out and see what it's all about. And let me tell you, this is one of the most clownish things I have ever seen in my entire life. So if you ever come across this ETF, I mean, I guess you can buy it if you want. But me personally, I wouldn't touch this thing with a 10-foot pole. Now, what is this ETF all about? Well, it's called the RORO ETF, okay? Row your boat gently down the stream. It's ticker symbol RORO. Now, what does this ETF do? Well, unsurprisingly, they have an insanely high expense ratio. Now, expense ratios are very, very important to your long-term returns. You want to mitigate your expense ratios as much as possible when you are a long-term investor. Why? Because those are returns that are taken from you and given to the managers of the funds. Obviously, fund managers have to be compensated for their investment expertise. But if you buy a broadly diversified total market index fund, you can get VTI for 0.03%, and you can get the total world, every stock in the world basically, for 0.07%. With this one, after a fee waiver, you're paying 1.15% of your investment every single year in fees. That is insanely high. This is higher than ARK. And ARK's a clown ETF. So what does RORO do? Okay, so we know they have an insanely high expense ratio. And the portfolio turnover is 1,212%. Oh my God. What does that mean? That means they turn over this ETF, like basically the assets of this ETF are turned over like 100% per month. And this is for the most recent fiscal year ended August 31st, 2022. I guess that covers a full year. I have never seen a turnover rate this high. Basically, what that means is they're just trading in and out of whatever they're freaking buying, okay? This is like astronomically higher than anything I have ever seen. Like, it's mind-boggling. I didn't even think a portfolio turnover could be that high. I mean, you got to be like, I think there's day traders that have lower portfolio turnovers than this. I mean, I'm kind of exaggerating, but okay. So what does RORO do? Row your boat. The advisor invests the fund's assets in one or more ETFs or the underlying holdings of ETFs. So it's an ETF that buys ETFs. Okay. At the end of each week, the RORO index observes, it should be called the RERE index, observes the short-term relative price movements of gold as compared to lumber. Imagine this is your investment philosophy. Oh, let's compare gold and lumber. And that's what I'm going to buy or sell stuff. When the price of lumber has outperformed the price of gold, the RORO, the RERE index, will have 130% exposure through one or the more underlying ETFs that principally invest in a mix of U.S. small cap and large cap U.S. stocks, bro. Okay. So basically they're buying leverage ETFs if, lumber does better than gold. Okay. I mean, bro, how much should lumber go up, bro? Bro, be go, bro. Buy TQQQ. When the price of gold has outperformed the price of lumber. See, oh God. I hate the investment. I really hate it. The RERE index will have 100% exposure through one of the primary ETFs that principally invest in long-duration U.S. Treasuries, okay? So basically, I think RORO stands for risk on, risk off. So basically, they're trading back and forth between long-term Treasuries and leveraged ETFs in small caps, U.S. small caps, and U.S. large cap stocks. This is the most ridiculous thing I have ever seen in my... Like, what? People get paid money for this? Buying treasury ETFs and then selling that and buying large cap leveraged stocks, small cap stocks with leverage? This is absolutely insane, okay? Now, I think I had the portfolio holdings. So here's their holdings. As of May 31st, this is pretty old, but this is the one thing I could find. Exchange traded funds. Okay, they have iShares 10 to 20 year Treasury bond ETF, which didn't that get shellacked over the last year? He probably traded out of it. PIMCO 25 year zero coupon U.S. Treasury index. Okay, remember, long-term treasuries are very sensitive to interest rate risk. They're very sensitive because the longer the bond, the more future cash flows you have to discount at the market rate. And as the market rate goes up, those very far out future cash flows get discounted a lot because rates have changed. Basically, long-term bonds are very, very sensitive. More than short-term bonds, notes, whatever, than basically anything else, okay? So when they launched the ETF, basically it's a bond ETF, long-term bond ETF, which isn't TLT like super low fee. And he basically trades in and out of TLT or whatever, some equivalent, and then buys levered ETFs. So, it's not surprising this guy has 750,000 followers. He's got his garbage. This thing is trash. Okay, why would you buy this? Let's go look at the performance. Okay, now I know past performance doesn't matter. I get it, but it's still kind of funny because when it comes to the investment industry, in the investment industry, it does matter. So we see the ETF launched, and it was like what, $20. And then it just absolutely plunged, probably because he had freaking treasuries. So it's down 20% ever since it went live November 20th, 2020. I wonder how much this has underperformed the S&P 500. Oh my God. Michael Gayed, I don't know, man. You're very special, okay? I'm really upset that you blocked me, but I can see you on another account. You hurt my feelings, dude. But at the end of the day, I can see you for what you are. You manage clown ETFs. You might as well partner up with Kathy Wood, bro. All right, talk to you later. Cheers!